back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alconin, and I am on the line with Tim Ord, and he is the publisher of the Ord Oracle. Tim, how you doing this morning?
Good. Yeah, I'm good. Glad to be on.
Okay. Well, you're featured in Fari's book, of Master Traders.
Right.
That is an accomplishment in and of itself. Do you have a favorite Fari story that you could share with our audience?
Well, actually, I met Ferry a long time ago. Um, he was in an investment club out in California, and he and a group, actually, Sherman McCollin, Ferry, and a couple other guys were in an investment group in California, and they asked me to come out and speak about the ticks. I wrote some articles for the Stocks Commodities magazine regarding the tick index, and they thought it was a neat indicator. And so I went up to California. First time I met him, I think that was probably mid 1990s or something like that. And that's how first time I met him. And he hadn't gotten into business yet, relatively speaking. He was still working. He was an engineer for I don't remember what company it was, but it was like a Boeing company. And he was really intrigued about getting into the business, and so maybe I helped him take that step in that direction. I don't know, but that's the first time I met him, and he was a real congenial guy. So he's fun to be around with. There's always something going on when he's around.
Yeah, that's true. We have him on the show every Wednesday, and he really is very fun to interview. So tell us about the work that you've done on the tick, and how you use it as an indicator, and how you use it in your trading.
Actually, the tick is what it is. It goes on the NYSE. Actually, they have ticks now for the Nasdaq and probably even some other index. But the one I watch is the tick for the NYSE, and all the tick is they take all the stocks on NYSE that are traded up a tick. In other words, it traded at 40 and it traded 40.01 on the next trade. That's an uptick. And they extract that from all the stocks at that moment in time that traded on the downtick, and they extract them out. And so when the tick reads, say plus 500 at that particular moment in time, there's 500 more stocks that traded up at that moment than down, and that's what the tick is. And what I create an indicator out of it. I notice that when there's a lot of ticks for an extended period of time, all into the plus category, market's usually going into a kind of exhaustion move to the upside. And same with the downticks. When there's a load of downticks hitting the market all at once, usually the market's going into an exhaustion move to the downside. So it works real well on a short-term basis. It doesn't really predict the bigger trends, but that's what I used it for. And back in the mid-'90s, I was trading a lot of options, so it came in very useful. So that in general how it works. I do have several articles back in the 1990s that I wrote about the tick index, and I combined it with candlestick charting and some other things to try, increase my percentage wins and stuff.
So you're using it as a contra indicator when the tick. I mean, I did use it for a little bit when I was doing some shorter term trading. It's a fade, and when it gets over, I believe it's 1,000, right? Is
Yeah.
one of the
Yeah, it
thresholds.
gets up around 1,000. It's kind of an exhaustion move on a short-term basis, and I combined that, and I did some work, with the trend. Trend's a little bit more longer-term type indicator, but that indicator I really like really well. It helps. A lot of times at significant lows, you get the trend up to 2, 3, 4, 5, 6 sometimes, and when that starts happening, you're going into some sort of a major low. And the trend, actually, definition of a trend is advancing issue divided by declining issues divided by, again, volume advancing issues divided by the volume of declining issues. So anyhow, that ratio created by Richard Arms Index out of Albuquerque created that back, I think, in the 70s or something. And I watch that real closely. I do have quite a few different indicators using the Arms Index, and that's a good indicator to use. And it helps really. Sometimes it tops is pretty good. but it works a lot better at bottoms, and I use that quite a bit.
Okay,
So
Tim. So you like to follow the S&P 500. Now, I've had debate with some other guests on the show. I mean, I just follow the futures. I mean, they're open, almost 24/7. They can make tremendous moves while the cash indexes are closed. So they do roll every 3 months. So you kind of have to figure that into your analysis. My first question is are you more of a student of following the cash or better indicators in the futures?
no, I follow the cash. Consistently we've been in the top 10 of Timers Digest, and um, uh, right now we're actually neutral. This is option expiration week, which normally has a bullish bias, so this week may hold up. But there's some sort of a minor pullback, probably what I'm starting to see, according actually to the ticks and actually to the trend readings, that we may get a pullback here. Nothing real significant, just kind of a scare to the downside that will probably lead into the year-end rally. But all the statistics I use is basically on the S&P Cash Index or the SPYs, which is the ETF or the SPX. So, um, it's actually it looks good until year end. It's kind of hard to see what it starts to look like back starting in January of next year. But just before, I think we got a slap coming. I think maybe going into the Thanksgiving time frame, then up from there. But I used to trade the futures, but anymore I'm a little bit longer term and more or less trade the SPX type indexes.
Okay. Do
So
you what are your time frames? I mean, is it are you looking a day or two, a week out? It sounds to me like you're a little bit longer term of a trader. Or is it kind of like determined by the market? Let's say if you get short here, it starts to move in your favor, then you can adjust your stops accordingly. On the other hand, if you're short here and let's just say it goes back up to 2054, you're stopped out. What's your time frames for your trades?
no, it's mostly at least a week or two. I'm trying to catch the trend of the month. So I'd say I'm a week to I don't know 6 week time frame. A lot of times after a month and a half rally or something or decline, the market's going to do something else that's going to be a worthwhile move in the opposite direction. So my horizons, is in the weeks, I guess you might say. Sometimes they're only a week or two. Sometimes you get on a trend and momentum stays in your direction. You stay with it. So trades per year. I'll put in 12 to 18, some in that way, in that vicinity. Sometimes you get in a choppy market where things you have to reevaluate, I guess, and sometimes the trades will become more shorter. But right now, I think if we do have some sort of high this week, we're only looking for maybe a week or two down, then back up again. So it's nothing. That's what I'm kind of looking for right now.
Okay.
Um,
So you let time determine, the length of your
but it,
trade, right? If
yeah,
it's
it's momentum on a lot of the advanced decline lines and stuff like that. So that start weakening, and you start seeing exhaustion moves in the trend or tick or something like that, or the market's having maybe a mini blow off or something like that. Yesterday was kind of an interesting day in the S&Ps. It kind of shot up out of nowhere without the trend really signaling a bottom of any sorts. So I think this move up yesterday is in question.
okay.
You
And
know,
final question for you. Just of course, this is revisionist history here, but back in October, we had the consolidation before the breakdown to the Ebola lows. Did you get any kind of any kind of signs, any kind of indicators at that time that
yeah, actually I did. I got out at that top. I was looking for the sell signal, but didn't get the sell signal I like to have. But we did get out at near that high back in September, and we had some. Most of our indicators were kind of negative, but momentum was still holding on, I guess you might say. Then um, the market did push down, and we didn't. We got the run up to the September high, but we didn't catch the decline.
Okay, well, you can't catch all the moves. Tim Ord, publisher of the Ord Oracle, also runs a software program that you can check out on his site, Ord-Volume. He's also featured in the book written by one of our famous guests, Fari Hamzei, called Master Traders. So check that out. Brianna put a link in there. So thanks a lot, Tim, for coming on here at the Open. Great insight into your trading and your indicators, and we hope to have you on again.
All right, thank you.